So last week, I sold my AI startup for 7 figures. And in this video, I wanted to share my experience with you all and also share a playbook that we used to actually get acquired. So let's start. Hi guys, welcome back to my channel. I'm Raheel, now officially an entrepreneur with a successful business acquisition. So as you guys all know, I was a bit MIA for the past couple of months because I was heads down building Virtuans AI with my co-founder, Muddassar. And the idea of the starter was basically a bet on autonomous future. We believe that AI agents could augment humans, specifically in areas where we relied a lot on human communication. And when we were using these AI tools like Claude, ChatGPT, we realized that a lot of the conversational piece, they were really good at it. So what we built was an architectural layer that allowed any business to entirely automate their lead conversational aspects of their business. That included having conversation with customers coming in through multiple different channels, including text, including their social media, and including voice. So we built that entire architecture together and specifically targeted businesses that were super traditional. When we started Virtuans AI, we were quite broad. And that's what a lot of systems, a lot of tools, a lot of software that we currently see in the market that are easy to build. And a lot of people are focusing on that aspect. But very quickly, we realized the probabilistic angle doesn't really work, and you have to go deeper into a specific use case and solve it end to end. And that's exactly what we did. And so the gap that we saw in the market was exactly an arbitrage on AI versus humans. You were paying humans $80,000 per annum to do something. You pay a fractional 5%, 6% of the cost on AI to do the job better. And then we realized that targeting a specific niche, going deeper into a specific use case, was the best bet we made. And that just allowed us to expand. We didn't have a lot of advantage because we were not in the US, where there was a lot of capital flowing, so we did not raise any capital. And instead, we built it from Pakistan. We built it from Pakistan, expanded in the local market first. Then we moved to the UAE market, expanded here. And we focused on just 3 pillars of the entire startup. Number one was sales. Our product had to be superior. And the third part, customer success. We did not focus on anything else. No PR, no nothing, just 3 metrics that we optimized for. And then the magic really happened. A couple of weeks ago, a US-based company, AutoAcquire, which is a huge player in the used car dealership market, approached us. We started having conversation. They loved the tech that we were building. And the conversation went on. They tried our product. They had a conversation with us, and they made a move. They gave us equity plus cash, and Muddassar and I, we will be joining AutoAcquire. Me joining as their head of AI, managing the entire product portfolio, and my co-founder will be joining as the head of AI in terms of technological implementation. Now, the question is, why was our product or why was our company the perfect fit for that specific company to acquire? They had 3 options. Number one, they could have made it themselves. Secondly, they could have bought an off-the-shelf solution. Number three, they could have acquired. Now, building it is super expensive. You need tons of millions of dollars to hire the best talent from the market, give them the product roadmap, make sure they execute, and make sure they generate the results. So you're talking about a multi-million-dollar investment over a couple of years. So the building part gets superiorly expensive. Then you could buy off-the-shelf solution. But the problem with off-the-shelf solution is if I'm company A and my competitor is company B and we both are using the same product, what is the competitive advantage that I have? There is none. I don't own the data. I don't own the improvements. Whatever capabilities I have, my competitor has those capabilities as well. The third part is the acquisition piece where things get really interesting. Now, if you have the capital, right, making it becomes superiorly difficult, right, specifically for a traditional business that is targeting a specific niche. Now you go off the shelf, there's no competitive advantage because if everyone has the same technology, what's so special about you? But now, if you find a company that is growing fast but isn't that big, you can make a move and you can acquire. Why? You take it off the shelf. Now, we are no longer in the market because our entire intellectual property is owned by that company. Third, they get us, the talent who has been working heads down building this technology, right? We have the experience, we had dozens of customers, we know what the market demanded, we know each and every use case and edge case that would make this technology fail or work. So they're buying the entire knowledge that we acquired over the past couple of years. And so the decision came down to three things. We started having conversation with this company, and the conversation was around the technology, the conversation was around the cultural fit of the team, and strategic initiative. So, as they say, the companies are not really sold, they're often bought, which basically means that whoever is building AI products right now, so if you're building any sort of a product, trust me, it can be replicated. But if you're building a product that is in a specific niche, handles all the edge cases within that specific niche, and has a strong talent of talented people that are actually building this, automatically there's an opportunity for an arbitrage for a company that is based in the West, where the cost of labor is super high and can acquire 100% of a company that is based in one of the emerging markets. Right? For us, we were not operating out of the US. We were operating out of Pakistan and the UAE, which are emerging markets, right? And if you look at, there's also one special thing about this. If you look at the consumer behavior in these markets, they're very tricky. So, for example, Pakistan, India, UAE, the people that are living here are very picky, right? They like to break stuff. You know, a lot of people would talk to our AI, just start abusing or start testing it out, right? So these sort of edge cases, if you manage them, the performance of your AI gets even better. And so at the end of the day, after evaluating all these things, the acquisition was made. It was a cash plus equity plus founder position deal, and we couldn't be happier. But then we started thinking about this, that in today's world where everyone is has the power of AI to build anything, how would someone sitting in, say, an emerging market like Pakistan, like India, like Saudi, UAE, Egypt, how can they build products and position themselves for a hefty outcome like we did? So, in the next part, I really want to share some lessons, some strategies that anyone building an AI startup can learn from, and eventually, instead of selling their product to another customer, can position themselves very nicely in the market so they can actually get acquired. Here is something that I really want to talk about. And I think this is a strategy that a lot of people are sleeping on, right? Specifically, I think this is very relevant to the people who are in the emerging markets, right? There's less capital, there is a lot of competition, there's a lot of emphasis on service providers, on providing services like software development, custom development, and stuff like that. And I think that's great, right? But I think there's a better strategy, which is build for acquisition, right? If you look at how the landscape is changing around the world and the specifically the AI landscape, it's consolidating really fast, right? Just a couple of days ago, the news came out that Anthropic launched a legal plugin, which basically meant that a lot of law firms can start using Claude and can start generating legal arguments or start getting information very specific to the legal domain. And what effect did it have on the entire market? And if you looked at all the public stocks of legal providers, specifically providing software to these companies, they went down by more than 10%. They were sold very heavily, which basically meant that the market is now pricing in the fact that these big AI providers like OpenAI, Anthropic, Google, now they'll start coming for these companies, for these SaaS providers, which basically means, and I have a thesis which I now have started to believe, that software Like everything else is going to become a commodity, which basically meant the era where you could demand 80% gross margins is now over. Now people are going to start saying that, hey, this is a product that I'm getting for $50. Why are you charging me $100? Or if I can do this with ChatGPT, or if I can do this with Claude, why should I buy your software? Which basically meant the entire era of selling software is now at a very big turning point. And even if you look at this amazing chart, which shows you the software valuations, it's at its all time low, which gives me the impression that if you're building a SaaS company, I wouldn't really bet on it, right? So, what else is there for anyone building a new company to bet on? And I think acquisition is the play. Now, here's the strategy that I've been thinking about, which is you need to find a niche. That's number one. Pick a traditional business that is hell boring, an accounting firm, a traditional import export business, a traditional logistics business. Dive deeper into that niche and build automations or build a product that is end to end for that specific niche. That does two things. Number one, you're no longer a GPT or a Claude wrapper. That's number one. Second, when you're interacting with these customers, automatically you learn a lot of domain knowledge, which basically means how logistics services work. What are the small little edge cases? Where does human to human interaction comes in? And so when you're building out the features, now these features are so specific that it will be very difficult for any bigger company to come in and just replicate. They'll have to spend a lot of time with these specific customers to handle these multiple edge cases and handle these integrations, which is why niche focused AI products are going to last much longer than generic SaaS companies, right? So that's number one. The second thing that you have to focus on is, okay, so now you're focusing on a niche. Now go deeper into that niche and start acquiring customers and start getting real traction. Don't worry about the margins right now. Just get the money flowing, because as you get the money flowing, more and more people using you, you'll be working very closely with more and more customers, which basically means you'll be learning more, and therefore your product offering or your entire solution will be much more advanced. Once your solution is advanced enough, and I'm talking about a couple of months, I'm talking about 6 to 12 months timeline for this stage specifically. Once this is done, then you start entering into the realm of targeting bigger companies. So now, when you're targeting a specific niche, go after the smaller players, solve their problem, but then go upstream. Upstream means go target the bigger whales in that specific industry. And while you're targeting the companies in this specific niche, automatically, I'm sure a lot of people will start reaching out to you asking about your technology. A lot of family offices will start reaching out to you for acquisition. They might not be serious because you'll be very early, but they love to start a conversation with you. And that's your signal that something is working. Because before our acquisition, we were getting tons of inbound from family offices that really wanted to understand our business, from private equity, from people who actually buy, building portfolio companies. They buy small companies, and then they make them into like a big software play, and then sell it to enterprises. And that is the point where you start listing yourself in multiple different directories. So Acquire.com is one of them. You can start listing yourself on Product Hunt. You can actually start marketing yourself in LinkedIn, and you're actually building in public. Now this does two things. Number one, it brings you on the map. Secondly, if you're publishing whatever you're building and you're sharing the journey with the world, automatically people will start thinking of you as an expert in your specific domain, and you don't need to hire tens of engineers for it. If you know how to build, if you're a software engineer from Pakistan, pick a specific industry, just build the product, and just target that specific niche. Once you're done with this, now ask yourself, do you check all the boxes? Number one, does your product solve a specific problem for a very, very specific niche? Okay. Number two, it has real users and it has real revenues. It doesn't have to be $50,000 per month revenue. It can be lower, but it needs to be real. And secondly, thirdly, you have to think about if it has a moat, which basically means when some competitor or some other player comes in the market, your customers are not leaving you, which basically means higher retention. If you have these three things, then automatically you're at a prime stage where you can start listing yourself and start entertaining acquisition requests. I met a lot of people when I went to the Dubai AI Festival. Automatically, that generated a lot of inbound demand. Then, automatically, as you're posting yourself, posting your journey, you're bound to get inbound requests. And if you're willing, they'll pay you cash, they'll give you equity in their company, and it's much better to trade equities in a company that is smaller versus in a company that is bigger, right? Because the company that is acquiring you has the resources to do it, and their equity is much more valuable for you. And then finally, you can join them as well in senior positions. For example, me and my co-founder are joining Auto Acquire as their head of AI in product and in technology, right? So automatically, and this is the outcome, which includes a multi-million dollar deal in less than 2 years. So the ROI is extremely high versus raising funds and trying to grow the business, which you know eventually will be competed out. And especially in Pakistan and even in India at the moment, where the FDI is at all-time low, you really want to think about carving a niche for yourself and deploying a different strategy than used currently in the West. So I think everyone chasing the next billion-dollar company, that's completely fine. But I think there's a much, much smarter way to actually grow yourself. Because after 2 or 3 years, if you get a payout of, let's say, $5 million, that's a much, much better payout than $1 million exit or $1 billion exit 10, 15 years down the line. Because I think you can compound your earnings over time, right? So if you are someone specifically around in the emerging markets and you're thinking about starting a new startup, this is how I would approach. And then I would package my company in a way that a company in the West, bigger companies in your specific niche can come in and acquire you. So there you have it, guys. I try to keep it short because there's so many things to talk about in terms of the business decisions we made, the type of customers we went after, the type of features we picked. So I think this is a whole new discussion that we can go into. But I really wanted to share our experience with you and how I think the blueprint that people can actually follow, specifically in the emerging markets, to actually build products and build solutions that can eventually get acquired. And by acquisition, I mean you get a good payout, right? And so this is exactly what we all are after. And so I can talk about this topic forever, but I really wanted to share this with you. And if you're someone who's building, you should definitely consider this strategy. And in the coming weeks, I will be sharing a lot about my experience, about how we are heading forward, the products that we're building, and how we're thinking about what is happening in the industry. So don't forget to like, don't forget to subscribe. And if you have any comments, if you have any questions, just comment below and reach out to me. More than happy to help. I hope you found this video valuable, and I will see you in my next video. Thank you so much.